Gold is exploding, silver is exploding, and almost nobody is asking the most important question. What if this is actually the warning sign, not the opportunity? Because every time in history gold goes parabolic like this, it doesn't mark the beginning of the move, it marks the end. And if you have a friend who just bought gold or silver, you might want to send them this. Look, I'm not saying gold is bad. If you think in decades, in generations, gold makes sense. But markets don't move in straight lines forever. Every parabolic move needs a cooldown, every single one. And history is crystal clear on this. 1970s, inflation crisis, gold goes vertical. Then, a 28-year cooldown before new highs. 2008, financial crisis, gold runs again for years. Then, another 10, 12-year cooldown. And now, gold over $5,000, straight up, parabolic in just months. This is not how sustainable moves look. This is how tops look. Here's the mistake most people make. They compare gold to the US dollar. Of course, gold goes up versus dollars. They print more dollars every day. The better comparison is gold versus Bitcoin. Two finite assets, but only one is mathematically scarce. Gold is scarce, maybe. We don't know how much is underground. Bitcoin is provably scarce, 21 million, ever. So compare them directly. And when you do, the data gets very interesting. Historically, whenever gold outperforms Bitcoin for about 14 months, that's when buying Bitcoin becomes the opportunity of a lifetime. It happened in 2017, it happened in 2021. Bitcoin underperformed gold for 13 to 14 months, then boom, trade of the century. Right now, we are at month 13 again, exactly the same setup. Great question. If this is so obvious, why is Bitcoin still depressed? Because the crypto market is still recovering from a massive leverage wipeout back on October 10th. Forced liquidations, exchanges hurt, market makers hurt. The industry has been limping, but the fundamentals, they've never looked better. Wall Street is now openly talking about tokenization, blockchains, and traditional finance merging into one system. This isn't fringe anymore. This is Davos, UBS, BlackRock, Euroclear. The fundamentals are rising, but the price hasn't caught up yet. And that disconnect is where the opportunity lives. There's a metric called the Bitcoin MVRV Z-Score. Here's what it tells you. Is Bitcoin historically overvalued or undervalued? Above 6 or 7, danger zone. Near 0, generational buying zone. Right now, it's around 1, which historically means we are much closer to undervalued than overvalued. We're nowhere near euphoria. We're near apathy, and apathy is where big money is made. When you combine gold extremely overvalued versus liquidity, Bitcoin extremely undervalued versus liquidity, Bitcoin extremely undervalued versus gold, and the 14-month historical pattern, you get a very rare setup, the kind that only shows up a few times per decade, which leads to this crazy sentence. Selling gold at $5,000 to buy Bitcoin at $88,000 might be the trade of the century, not because gold is bad, but because parabolic moves don't last, and depressed assets with improving fundamentals don't stay depressed. Gold is sucking all the oxygen out of the room right now, just like it always does at the top. Meanwhile, Bitcoin is quiet, ignored, and historically undervalued. And if history rhymes even a little, this is the part of the cycle people look back on and say, I can't believe Bitcoin was that cheap while gold was that expensive. Think about that.